Welcome back to the Retire Young radio show. I am your host, Joshua David. Always having a great time in studio with my good friend, my great pal, the mastermind of this whole operation, Mr. Al Connickson. Don't forget to subscribe to the podcast on Apple Podcast, iHeartRadio, and Spotify. Al, in that last segment, we talked more on the accumulation phase of people's lives. When the smart money is creating income, they're utilizing the proper income assets, right?
Right.
Now, you open that rabbit hole towards the end there, and you mentioned a little bit more about options. And we're seeing more and more people want to understand more about options. It's probably, I guess, in my opinion, probably the best and most versatile asset class out there. And they're great for retirement accounts.
Right.
Now, a lot of people just buy and hold or buy and hope, whatever you want to call that, for many, many years. There's strategies and techniques that the institutions are utilizing with options. Let's talk about some of those techniques and strategies with options.
Well, options are probably the most misunderstood asset there is out there, but also maybe one of the most versatile that can be utilized both in the accumulation phase of your life and in your retirement phase, the distribution phase. Options can be used with the ability to define your risk and actually have a trade set up with that defined risk and basically the potential for unlimited upside. But they can be used for shorter term trades for that immediate cash that you need in that accumulation phase. And then what a lot of people put together for their retirement, for their wealth, a stock portfolio. You know, a combination of the right stocks or the right equities in a portfolio is fantastic. It's a great way to prepare for the future. But you don't have to just put it together and just let the equities do what the market will have them do. You can benefit from them. You can boost the returns you can get. You can provide protection. What if you don't have a stock portfolio? You can use options as a substitute, so you can actually benefit from market direction, stock market direction, without actually owning any stocks. And here's what I guess I call the magic of options. You can actually get paid cash to wait to buy a stock at a lower price, or you can get paid cash to wait and sell it at a higher price. Doesn't sound like it's legal, but it is, and we talk to you about that. We teach you how to utilize options to be able to do things like that.
That sounds like premium.
It is, yeah. You're collecting premium. That's what it's called. It's like if you sell something, people are going to pay you. You're going to get some cash for that. That's a premium in the options world.
That sounds like a lot of like what insurance companies do. Us as consumers, we pay a premium. The insurance company is collecting a premium.
Correct.
And if we don't get hurt, do we get that back?
No, they get to keep that.
Yeah, the insurance company gets to keep that. So that's
Sure.
that premium that they keep. That's pretty similar to the options market.
Right. Well, with options, we call that one strategy an insurance policy on your portfolio. So there is an option strategy that you can get involved with that will go up in value as a portfolio, whether it's an overall stock portfolio or individual assets. If they go down, this option strategy will go up in value. It's like an insurance policy. And when you think about it, you mentioned insurance on your health insurance that you have, or life insurance. You have life insurance, health insurance. You have insurance on your house, insurance on your car. Do you know for sure that your house is going to burn down or get flooded and you're going to need to access that insurance? Do you know that you're going to have a car accident and you're going to need to access that insurance? No, you don't, but you have it anyways, just in case. Well, in the financial markets with the stock market, do you know that at some point in time it's going to go down in value? Absolutely. It will. It always has. And this insurance policy can protect you and eliminate the damage that can happen in, say, a bear market or a major correction in the market. Yeah, and if you understand how to use options, it's a great way to provide that protection and also to boost the returns of a portfolio while in retirement. Because in retirement, if you have, let's say you've worked for a number of years and you have a certain amount of money in your retirement account, if you don't do something to grow that and to generate some cash off of it, it's just going to dwindle in time as you draw money out. Options can be used to kind of create that cash flow, and then also the leverage assets can all be used to boost the value of that retirement account. So it's always there. It's going to be there, maybe to pass down to your kids or grandkids, or use for some kind of a charitable organization.
Yeah, it's amazing that, everybody has insurance like you're talking about on themselves, their cars, their homes. I want to ask the listeners, do you have insurance on your portfolio? Well, it didn't sound like there was anybody that had it, but that's the problem is people don't know these different techniques and strategies. These techniques, the smart money is using them, and they are available to us, the average person. And it comes down to a little bit of education, learning these techniques and strategies, and being able to learn to apply them to your retirement accounts. So, Al, you talk more about this, how people can potentially protect their portfolios, how people can participate in up and down markets in their retirement account. Al, I want to continue this discussion about retirement, but a lot of people feel like they're stuck with a 401k, and I was actually having a conversation with some friends this week, and they had 401ks, and they said, "Well, I can't do anything with it." Well, some 401ks are getting pretty good, but the problem is they wanted to be able to really protect what they have. I mean, hopefully they gained a lot in the past, 10, 15, 20 years, whatever that may be. But self-directing is where you really have that control, right? So before we talk about self-directing, what are some of the opportunities that people may potentially have with 401ks?
Well, yeah, 401ks are kind of have now become, I guess I should say, the go-to retirement strategy for most people. That's an employer-sponsored retirement plan. But remember, they were never intended to be your primary source of retirement income. And it was just kind of an adjunct, and we've talked about that before. But there's a lot of limitations in most of the 401ks out there. And one of the greatest limitations is the people's really lack of knowledge of what they have in those accounts. I mean, if you had to take a piece of blank paper without looking at your portfolio, write down what you have in your 401ks, and then next to what you have, why you decided to make that particular investment, most people would end up with a blank piece of paper.
They would say it's because it looked cool. It had a nice color logo or something.
Sure. And that's what we have been conditioned to believe, that if you just take this money, a little bit of money from each paycheck, and put it into this 401k, you're going to be fine. Well, first of all, think about it. Who's making the decisions as to what you invest in? Who decides specifically which mutual funds or ETFs or stock to invest in? Who makes the decisions as to when to transfer from one to another? And it's you. You are your own pension fund manager. So that timing mechanism we talked about before, our core strategy, which shows you how to identify when something is going into a buy zone or a sell zone based on that supply and demand imbalance, that can be used in a 401k too. So in these classes, we teach our students how to get better maximization out of those 401k dollars. I understand that
potential.
It's a potential, but if a mutual fund, for example, looks like it's moving into a supply zone where there are sellers waiting to sell out of that kind of an investment, maybe you want to look at rotating into something that's moving more into a buy zone. So you can trade within those 401ks. There's so many different ones out there. It used to be that you only had a couple times a year to make those decisions. Now with some of them, you can do it pretty much anytime you want to. But learn how to maximize the value, what you have in your 401ks. And then why not look at maybe doing this? If you have a match, if a certain amount of what you invest in that 401k is matched by your employer, and then you have exceeded that match, a lot of our students take that extra money that they are really counseled to continue to put into a 401k. They'll put it into a self-directed IRA where there are no fees, and you have all these choices we talked about: futures, Forex, options. And you can participate in up markets, down markets, and sideways markets without any fees, which is a huge benefit to you.
Yeah, I mean, the great thing of the 401k, it's helped people save. The downfall is people just don't know what they do with them, so they do nothing. And if you want to learn more about doing something with your 401k, just maybe making better decisions, or just understanding more what that is, to see where you are and what you need to do for the future, see what's available. Now, coming up next, we're going to inspire people to get started trading and investing. So coming up next, how to get started trading and investing, plus self-directing. We'll be right back.